Greetings, members, one and all of the Salivation Nation. How $5,000 gold is possible within 5 years. Let's explore. I'm going to be putting forth a scenario based off of a hedge fund manager that makes the case for between $3,000 and $5,000 gold within 3 to 5 years. I think it's interesting to kind of take a look at analysis like this to kind of see where we are at. And the reason why I think this is possible is because of really what's happened in the past that we've not really fully recovered from. But as with anything, take this as a grain of salt. But it's not that long ago where $2,000 gold seemed like a bit out of the realm of possibility, especially over the precious metal slump that we experienced over the last, 6-7 years, so to speak. We saw prices kind of dip, and a lot of people kind of got out of precious metals because of what's been happening as a lackluster market. And that's the time to really get into precious metals. There is a case to be made for higher gold and silver prices, especially gold prices, as we did see it run into nominal highs over the past year in the pandemic. Around this time, actually last year, gold was trading at record highs. So let's take a look and let's pick this apart a little bit. We're looking at an article from Bloomberg. It says that gold is primed to surge to fresh highs as the risks around central banks unwinding massive stimulus are underappreciated by investors, according to a fund manager who forecast the metal's ascent to a record last year. So that kind of gives them a little bit of credibility, street cred, so to speak, from Diego Parrilla, who manages the $250 million Quadriga Agneo Fund, said there isn't a widespread awareness of the long-term damage that's been caused by ultra-loose monetary and fiscal policies. And that sentence alone is something that we should take into account because of what happened in the previous cycle of loose monetary policies. Remember, we had 3 rounds of quantitative easing before the pandemic hit. We've never really saw the consequences of that yet. Artificially low interest rates have created asset bubbles that are too big to burst, which will make it very difficult for central banks to normalize without risking their collapse, he said. The tapering process will be glacial in terms of speed, said the Madrid-based Parrilla, who correctly predicted in 2016 that gold would climb to a record within 5 years. I think the drivers for gold strength not only remain, but actually have been strengthened. Yeah, I kind of tend to agree with that. The strengthening of gold drivers. The fund manager said he's sticking to his view that gold could rise to $3,000 to $5,000 an ounce in the next 3 to 5 years. The Haven asset, which reached an all-time high of $2,075.47 for a very, very short amount of time, though, in August of 2020, as the pandemic wreaked havoc on the global economy, has traded near $1,800 in the last few weeks. Gold took a tumble after the Fed's hawkish shift in June, if you want to call it that, when officials sped up their timetable for policy tightening and said they would start discussing scaling back bond buying. Treasuries have been rallying since the end of March, even as inflation accelerates, pushing 10-year yields to a record low. That would typically raise the appeal of holding non-interest-bearing bullion, but prices are still well below last year's highs. So people have kind of fallen somewhat out of favor. I remember last year at this time seeing 2,050 plus gold, thinking, well, we're at the beginning of a kind of a bull cycle. But it got overheated before it came back down. Gold is disconnected from some of the moves in treasuries and real yields, but gold got a boost from a major risk-off event that will make it clear that central banks aren't in control as much as people think, said Parrilla. who has worked at Goldman Sachs Group and Bank of America, Merrill Lynch, and has 25 years experience trading in precious metals. In fact, he very well could have been the brains behind Goldman Sachs' prediction of $3,000 gold. You may remember I did a video on that a while back. Most analysts expect gold to gradually decline over the next few years. And I've not necessarily heard that either, although there's been some talk that this month and next month we could see it fall back a bit. The post-pandemic recovery, Fed tapering, and a stronger dollar will all weigh on the metal for sure. And they say that it will fall to $1,700 an ounce by the end of the year and decline further in 2022. And I have seen some talk about that, although I predicted that gold would touch $2,000 by the end of the year. As the time marches on, it looks like I could be wrong, and these analysts may be right. UBS Group AG strategists, including Wayne Gordon and Giovanni Stuanovu, said in a note, gold fell 0.4% to 1807 in London after rising 2.5% in July. The performance of the Quadrigo Igneo Fund, which was launched in 2018, has suffered recently due to its strategy of being long on gold and insurance and short on equities, but remains stable on some inflow from clients, Perea said. The fund's managers remain focused on their mandate, and nothing has fundamentally impaired their view, he said. Central bank money printing isn't really solving problems. It's delaying the problems, especially when you take into account that a lot of these stimulus checks still have not arrived in people's pockets. In fact, it was mentioned by another channel, Johnny O, who dabbles in precious metals from time to time, and said that and made a good point about it. Some of these things aren't getting to the people that they're supposedly helping. The government can't even get spending right, even though they do know how to spend when it comes to their own programs and things from within. But when it comes to helping the actual people, even though I disagree with some of these loose monetary policies and some of this thing, they can't get it to the people. More on that in a future video too. Personally, it'd be quite interesting. Wait do you see that video? So it's delaying the problems. Gold will benefit purely from being a physical asset that you cannot print. Those are fundamentals, folks. All the stuff you see here cannot be printed. Although people mistakenly say, well, when you stamp a design or print a design on a coin, but no, that's minting, that is striking it. Striking is much different than just printing, and that's for sure. It's about metal on metal, bringing that design to life. Boom, it just comes right out you in that striking stare on us. Gold is unmistakable, and its properties has been for thousands of years, will continue to be as such. These pieces certainly are enduring, and its beauty is unmatched. But, so what does this mean, and what is the author missing from this article? I think that is quite profound, and why I actually think this makes the case for $5,000 gold in 5 years, more so than what the article talked about here. Yes, you're seeing me be pretty bullish on gold. Do I have a right to be? Could I be wrong still? Yes, I could be. I've been wrong before, I'll be wrong again. But there's been times where I've been correct as well, and I do believe that my predictions and analysis is based off of some knowledge of the markets, although there are very many people out there that see the intricacies and get further into the details and essentially into the weeds of the markets. But I think I've got enough experience under my belt that I can give some viewpoints on this, on the economy in general, and think about it. Have we fully recovered from the financial crisis of 2007 and 2008? And by that, do I mean, have we learned the lessons of 2007, 2008? No, we have not. An emphatic no. In fact, if you watch the movie The Big Short, the very last couple of lines in the movie on the screen is they've basically given it a different name. You know, they're doing much the same type of thing. Some people think that we are now on the precipice of yet another housing bubble popping, and that some of the housing starts and stuff are slowing dramatically here. There's some fear of evictions that could be occurring, and that could spiral downwards into another housing crisis. If we see that, and watch out, we could see a repeat of 2007 and 2008, piggybacking on the already problems that we saw stemmed from quantitative easings 1 through 3. We haven't even mentioned the repurchase agreements that happened between September and December of 2019. There's a lot of money that's been printed. Where is it? The velocity of money. We've not seen it. But it's been out there. It's been circulating in a sense to prop up the markets. Stock market has reached almost all-time highs yet again. How is this happening amidst worries of the Delta variant and other factors? It's that injection. And I'm not talking about vaccines. I'm talking about steroidal injection into the markets. What's going to happen? Where will we go? And I think these things and these problems, from quantitative easings to 1 through 3 to 4 and to infinity, that have not yet to come back to bite us, other than this inflation that we're starting to see now, which we could see some of that, at least the perception of a recovery starting in August, September, and October of last year. Year on year, those numbers may actually go down. But in that way, will give the Fed reason to say, well, it's transitory. That's what I predict is going to happen. But the underlying problems are still there. So though the numbers may go down on year, we still have inflation that is stemming up and from some of this money printing that's been going on. And you can't print your way out of trouble. That's what they're trying to do. The underlying parts of the economy that are sick continue to be because of modern monetary theory, larger central government control, and policies that I think will lead to potentially economic ruin, but certainly economic strife and problems. We'll see how it plays out. But I believe that those are ripe for issues that could lead, literally within 5 years, $5,000 gold. I'll leave you with this. You might say, well, Sal, the analyst and you are making such a projection. 5 years is a long way away in the age of instant gratification and where the markets are so volatile. It's easy for you to say that in 5 years. Well, they also said $3,000 within 3 years, too. And here I have said $2,000 at some point within this year again. We saw it last year, so it may be somewhat easy for me to make that prediction. Well, whether it comes true or not, we know one thing's for sure. Gold is the stablest of the hard assets out there in terms of wealth preservation. And you can't print it. So I don't know. I don't know what's going to happen. But I could literally see how that could be possible within 5 years. As to whether it happens or not, in a sense, this is not a prediction video. I'm just saying that we could paint the picture that the way things are going and how tone deaf our politicians, the central bankers, and governments around the world have been in terms of what makes money, sound money, what it should be. A stable dollar, stable coins they call cryptocurrencies, but how stable really are they? I don't think they're all that stable if they're fluctuating in price as much as they have. You've seen Bitcoin this year, up and down, sideways. It's insanity. I want something stable. I want something sound. I want something solid. I want something I can hold in my hand. I want something that has history that goes back thousands of years. Folks, that's gold. That is gold. Nothing else matches it. In a sense, not even silver, although I'm a fan of silver too, but these metals, especially gold, I believe is what's going to save the system, the true system of sound money, a system that cannot be corrupted. There you have it. Post your thoughts below in the comments section. I'd like to extend a multitude of gratitude to you all for taking the time to watch and encourage you to please rate share, comment, and subscribe.